Hello everyone and welcome to Crypto Chris YouTube channel. In this video we are diving into some hot topics from crypto world. We'll be taking a closer look at Pi network, its recent surge and impact it's having on the market. Along with that, we will analyze Bitcoin's movements and see if it's the right time to buy or wait. So make sure to stay tuned, hit that like button and subscribe if you haven't already. In one of my recent videos, I covered the Pi network, a cryptocurrency project that enables users to mine Pi coins directly from their smartphones. Since then, Pi coin has experienced significant price movements. Over the past week, its value surged by approximately 300%, reaching a peak at around $3. This surge is particularly noteworthy when compared to major cryptocurrencies like Bitcoin and Ethereum, which have seen declines of 9 to 20% in the same period. The recent surge has been accompanied by substantial trading volumes, with a 24 trading volume exceeding $1.75 billion. When comparing Pi network to established cryptocurrencies, it's important to consider factors like total supply and market capitalization. Pi network's fully diluted valuation, FDV, is currently $25.66 billion, assuming a maximum supply of 100 billion Pi tokens. The market capitalization, market cap, of a cryptocurrency is calculated by multiplying its current price by the circulating supply, representing the total value of coins currently available in the market. In contrast, the fully diluted valuation represents the theoretical market cap if all possible tokens were in circulation, calculated by multiplying the current price by the maximum supply, the total number of tokens that could ever exist. The key difference is that the market cap reflects the current valuation based on existing supply, while fully diluted valuation estimates the potential future valuation if all tokens are released, which can signal potential dilution risks if a larger number of tokens enter circulation over time. For comparison, Bitcoin has a market cap of approximately 1.59 trillion with a price of $80,000 per Bitcoin. Ethereum has a market cap of 255 billion with a price of around $2,100 per ETH. Now, to put this into perspective, if Pi coin were to reach $10 per coin, its FDV would be a 1 trillion, making it larger than Bitcoin's current market cap. If Pi coin were to reach $100 per token, its FDV would skyrocket to 10 trillion, which is significantly higher than the entire cryptocurrency market combined. One of Pi network's biggest strengths is its strong community. The project has built a dedicated following with thousands of users mining Pi on their smartphones and actively discussing its potential. A strong community is often a key factor in the long-term success of a cryptocurrency. We have seen this play out with projects like Dogecoin and Shiba Inu, where community engagement alone drove massive price increases despite limited utility. One major concern surrounding Pi network is its lack of real-world utility at this stage. Unlike Ethereum, which enables decentralized application and smart contracts, Pi network is still in its development phase. This raises questions about its long-term viability and use cases. Additionally, some investors have started taking profits from Pi and moving funds to other projects. In the crypto market, having a solid use case does not always correlate with price performance. We have seen projects with strong fundamentals and real-world applications struggle in price, while meme coins and hype-driven tokens skyrocket in value. This means that even if Pi network does not develop strong utility, its community-driven hype alone could still push prices up significantly, at least in the short term. While Pi network has demonstrated notable price movements recently and has a passionate community behind it, potential investors should remain cautious. The project's future success depends on its availability to deliver real-world applications and differentiate itself from a crowded market. Also, I came across an interesting tweet recently that raised a concerning point about Pi network. It seems that significant number of users are experiencing issues with KYC, the verification process, preventing them from migrating their tokens to the mainnet. This is a major problem, and without passing KYC, users are essentially locked out of transferring their Pi coins once the mainnet goes live. The tweet also mentioned that once the KYC process is completed and users are finally able to migrate their tokens, the price of Pi could potentially drop to 1/10 of its current value. This is a valid concern and it could lead to a situation where supply suddenly increases, causing downward pressure at the price. When a lot of coins are unlocked and users can finally access their holdings, there is a risk that many will rush to sell, especially if they've been waiting to cash out for a long time. This would naturally flood the market with more Pi coins than there are buyers, leading to sharp price correction. Moreover, this situation adds to the uncertainty surrounding Pi network. As it stands, many users are still in dark about when they'll be able to migrate their tokens and if the KYC process will be resolved smoothly. Until those issues are sorted out, there is a lot of risks involved, especially with Pi's price potential facing downward pressure once the users are able to access their holdings. In my opinion, this could lead to a significant price adjustment once the initial hype fades and the real supply-demand dynamics of Pi network start to play out on the open market. So would you invest in Pi network at this stage, or are you waiting for a further development? Let me know your thoughts in the comments. Now let's talk a little bit about Bitcoin. The big question right now is whether this is the right time to buy Bitcoin. In the short term, the answer is in my opinion yes, but when we look at the bigger picture, I believe Bitcoin still has room to drop even further. Let me break down exactly why. One of the most important indicators to watch is the relative strength index known as RSI, and as you can see here, Bitcoin has been moving within a defined channel and we recently dipped below the 30 RSI level, historically a crucial support zone. Whenever Bitcoin's RSI touches or dips below 30, it has often marked a strong buying opportunity. Looking at past data, we can see that every time RSI dropped this low, it was followed by a sharp rebound. For example, on previous occasions, Bitcoin bounced significantly after hitting this level, forming higher lows before eventually rallying to new all-time highs. That being said, while this may indicate a solid local bottom, I don't believe we have reached the absolute bottom just yet. What I anticipate now is a short-term recovery followed by another leg down before we truly find a long-term floor. In my last video, I mentioned that Bitcoin could drop into the $78,000 to $80,000 range to fill the CME gap, and that's exactly what just happened. Now the big question is what comes next. Let's take a look at Bitcoin futures CME gap to understand where the price might head. As I pointed out earlier, we had a similar gap in the 78 to 80k range, which has not been filled. This is a key level where big money often steps in, accumulating Bitcoin while retail investors panic. Now that the gap is closed, what I expect next is temporary bounce, but in the bigger picture, the market still lacks enough buyers to sustain a strong rally. This means that after a short-term move up, Bitcoin could head lower again to find stronger demand. Looking at the chart, we can also see a key trendline resistance at around $92,500, which aligns with previous price action. If Bitcoin reaches that level, it could be a strong rejection point, potentially leading to a local bottom before next major accumulation phase begins. The 78k level seems to be a key target, but it could also be around $75,000 or even $74,000, which represents previous highs and stronger technical support. This range appears to be most likely destination for Bitcoin in the short term. Once we reach this level, I expect to see some consolidation before Bitcoin potentially breaks out and starts climbing again. This is the scenario I'm anticipating, but as always, things can change depending on how the market reacts. Before I continue with the news, I want to notice that there is another opportunity on Binance Hodler Airdrops program. Right now, there is a great opportunity for those already holding BNB on Binance to earn free tokens through a Binance Hodler Airdrop program. The latest project involved its MyShell. The rewards for participating in this airdrop include 25 million shell tokens, which is 2.5% of the project's total token supply, with more rewards expected in 6 months. MyShell is an innovative project at its interaction of AI and blockchain, providing a platform for creating, sharing, and owning AI agents. The project, which has raised over $16 million, is backed by prominent investors like Binance Labs and Dragonfly and has already attracted 5 million users and 200,000 creators. MyShell's unique approach focuses on product development rather than hype, offering an open-source AI-powered entertainment and utility platform. Their shell agent framework allows users to create AI agents without coding with significant community engagements, and some creators are already earning $4,000 a month. MyShell's vision aligns with some BNB chains' AI-first chain strategy, positioning it as a key player in integrating AI with crypto. If you're not yet registered on Binance, you can easily sign up through the link in the description of all of my videos. Not only will you be able to participate in this hodler's airdrop program, but you will also get a 10% discount on trading fees when you trade on the platform. This can be a great way to take advantage of opportunities like this and start earning rewards without additional actions as long as your BNB is staked. As always, remember to do your own research before making any trades or investments outside Binance to avoid potential scams and ensure the safety of your funds. Now, let's shift our focus to the fundamentals and break down what's happening in the market. One of the biggest factors right now is the ETF outflows, which have been showing clear signs of panic selling. We have seen some massive outflows, starting with 1.1 billion, followed by 750 million, and just yesterday another 275 million. The positive side of this is that it looks like the selling pressure is finally slowing down. The biggest wave of panic selling may be behind us, and as the market absorbs these outflows, Bitcoin's price has started to stabilize. Now, with sellers getting exhausted, we're looking for the potential bounce from here as demand begins to pick up again. Take a look at the order book, especially the aggregated order book depth. This is where I start feeling really bullish. Currently, I'm analyzing the 1-hour chart with 10% price move range. I won't dive too deep into the technicals, but to put it simply, when you see a lot of green, it means there is a large number of buy limit orders ready to be triggered within that 10% price range. On the other hand, red indicates sell pressure from limit orders. Right now, there is significant amount of green just below the $84,000 price point, suggesting a lot of buyers are positioned to enter the market. Additionally, the futures market are showing a strong buying frenzy with traders eager to long Bitcoin at these levels, which could push the price up a bit in the short term. Given all of this, I think that we may have reached a local bottom for now, with many liquidations already occurring. However, while the short term looks more bullish, I'm still expecting further downside in the medium term. Fear and Greed Index is now showing extreme fear. And we take a look at the prices. Bitcoin is just below $79,000 with a drop with 8.6% in the last 24 hours. Ethereum is just above $2,000. XRP is exactly $2. BNB $565. Similar drop like Bitcoin in the last 24 hours. We don't have any gainers. Basically, only Mantra is up in the top 100 cryptocurrencies by market cap. And we have a lot of losers, like a lot of cryptocurrencies in double digits are down. We have like a lot of cryptocurrencies that is at the top 100 cryptocurrencies by market cap. They are falling down by 15, 10, 13, 14% in the past 24 hours. We have covered a lot of ground for Pi Network's price surge to Bitcoin's potential next moves. Let me know your thoughts in the comments. Do you think Pi Network can sustain its hype, or the market is just riding the wave? And when it comes to Bitcoin, are you ready to buy, or you're waiting for the next dip? As always, do your own research, and I'll see you in the next video.